Welcome to Real Estate in Real Time. I'm Woody Zimmerman here with Mark Skabowski of Remax Lakes. Welcome to the show.
Here we are, morning.
Good morning. I know today you want to talk about a big question that's on everybody's mind about the real estate market, affordability.
Affordability, and I know last year that was one of our key topics.
It was.
And if you look at pricing, it kind of petered out in the middle of the summer, picked back up, and has continued to rise again through this year. But there's a couple of things that make up affordability. Mortgage rates. We'll talk at length about mortgage rates today.
That's a big one, yep.
Number of homes available for sale.
Right.
Home prices, and then wages. And long term, let's address the wage issue. Most folks are seeing increases in wages. During COVID, we saw wages rise pretty dramatically because people had to keep people hired.
Right. There was a lack of workers.
A lack of workers, and I think we're still facing that.
Yeah,
unemployment is still really good. Right, 4.3% nationally,
right.
And I don't know what the number is in Kosciuszko County, but I got to believe it's below that.
Right. If you want a job, if you're looking for work, you want a job, there's a job for you.
And I understand the reality is it may not pay what you want it to pay, but you're exactly right. If you want to work, there are plenty of opportunities to work. I mean, I've seen employers that are now paying people daily. I've seen advertisements where you get your pay daily. Now,
I'm not sure that's the employee that I want is the one that's but
true.
You know what I mean?
But that's a benefit, and because the technology has improved to enable you to do that, now you don't have to wait a month or 2 weeks or at the end of the week to get your paycheck. You can get paid every day. It goes back to societally, we are instant gratification.
Roger, can we ask that? Can we ask to get paid daily?
You're the boss. You tell me.
I'm like,
get your payroll system in place. You can do it.
I'm sitting over here trying to figure out how to ask the question.
How do I get that? How do I get that?
Yeah.
So anyway, so that's wages. Wages have actually been increasing. So that helps buyers be able to afford to purchase homes that are a little bit higher priced. Mortgage rates. That's probably the number one thing, mortgage rates.
Everybody's talking about that.
They are, and with good reason, because we went from historic lows to, for a long time. I mean, basically money was pretty cheap. You could get a 30-year mortgage easily for 3.5%. I know I'm locked in at a 3.5% mortgage.
And you just said the key word, locked in. So a lot of people aren't moving because they're locked in.
They're locked into that 30-year rate. Why would I go and get an 8% rate?
Yeah.
At the start of this year, start of 2024, we were bumping 8%. I mean, and that squeezed the housing market. I mean,
big time.
Activity slowed down pretty dramatically. We've seen a steady decline in that rate throughout the year. Unemployment data last week was relatively good. There was a lot of discussion about, the Fed reducing. So for some reason, magically, interest rates started to come down. I think banks are getting more competitive because they're anticipating that those rates are going to drop, that the Fed is going to adjust rates. So banks have gotten more competitive. And I've seen 6 3/8. I had one client came in at 6 3/8 on a 30-year fixed. Now again, these rates are good credit, typically 20% down or conventional financing, but lenders are being creative because activity has slowed. So from a buyer standpoint, it's not a bad time. Rates have settled nationally. The average is about 6.5.
Okay.
I've seen 6 3/8. I had somebody this week lock at 6 3/4, all under 7%. When we started the year thinking between 6 and 7 is probably where we'll settle, and we're finally there. It took a while, but we're finally there. So mortgage rates are still going to be a driver for many folks as far as, do I want to jump into the market or not? You got those that are I'm going to hold out for 3. You're going to be holding out a long time.
Yeah.
We had not seen that in my lifetime, at least my adult lifetime.
No.
We experienced, and we've talked about it before in the 80s, right? And people are sick of hearing about it. You old people, we never saw 18%. Well, guess what? We've experienced it.
Yeah, we have.
Now, I get it that home prices were lower, Wages were lower, everything was lower.
Yeah.
Everything has gone up,
Yeah.
over time. But the fact is that mortgage rates have kind of settled down and they're getting consistent. I talked to a lender yesterday about somebody who was interested in buying. They had a property that they were wanted to sell, could buy without having that property sold. Could they then take the proceeds from that sale and plop it into their current mortgage? And the lender had a program for $350. They could put that lump sum and then that recalculated the payment.
Mm-hmm.
So it wasn't just prepaying the principal,
Mm-hmm.
which is a good thing.
Yeah.
It will shorten the term of the loan, but it will not normally impact your payment. So if you're paying ahead on your mortgage,
Okay.
if your mortgage payment's $500 a month
Yeah.
and you're paying $550 a month, you're applying $50 more. It's
Yes.
knocking months or time off of the end of the mortgage coming
Right.
back. Your payment doesn't change.
I see.
In this program, they might have had a $500 a month payment. They come in and they throw that lump sum into their mortgage,
Mhm.
and they would recalculate their payment for the rest of the term
Like
of
a
the mortgage.
recast.
Yeah, it's a recast, I guess is a good way to describe it.
Yeah.
So lenders are being creative. They get it
Mhm.
that people have got these different situations. So it doesn't hurt to ask, to talk to a lender about
Mhm.
it. And after the break, we'll talk a little bit more about mortgage rates and about home prices, maybe some calculations on what your payment looks like at a specific rate.
All right, very good. You're listening to Real Estate in Real Time. We'll be right back. Welcome back. You're listening to Real Estate in Real Time. I'm Woody Zimmerman here with Mark Skabowski of Remax Lakes, and we're talking about affordability. We've talked about wages. We've talked about interest rates, and I mean, for affordability, it looks like it is getting better.
It's getting better. Still, there's sticker shock.
Yeah,
Right,
I
there's
agree.
sticker shock for us old timers
I
that
totally agree.
houses that I sold
Yeah.
for 70 are now 180.
Yeah,
Right now, again, I've been almost 20 years in the business, so there's a long time for that to happen.
Mm-hmm.
But yeah, it's sticker shock. I mean, and you feel for somebody who's a first-time home buyer when
Right.
the average home price in the Warsaw market, a 3-bedroom, 2-bath is going to be 210, 220, something
Right.
in that price range. We'll do a show a little later on with those specific numbers, but the reality is, if you see a home come on the market under 200,000, there is still a lot of demand for those homes.
Yeah.
Because that's the starter home. A starter home used to be, 70, 80, 90, 100,000. Now
Right.
it's 210, 220, 230.
Mhm.
So again, over the 20 years, good Lord, a lot of gray hair, a lot of lost hair,
Yeah.
and a lot of difference in pricing.
Things have definitely changed. I mean, the house that I bought for $82,000 in 1997, and we sold it 17 years later for like 130,
Uh-huh.
and now I think I've seen it listed for like 230. It's
Right.
like it's just
It's craziness.
yeah,
It's craziness. So home prices for buyers, the good news is they're beginning to moderate. And I've got a graph that shows 22 into 24. It's kind of hard to read because I did it black and white. I did new color, but in 2022, so think in the heart of COVID,
Yeah.
we were seeing 10, 15, 20% price appreciation year over year.
yeah,
So in 23, that had bottomed out to where there wasn't much home price appreciation. Now prices were still high. They didn't drop, but you're not seeing that increase in prices. So coming into the middle of 23, you saw prices kind of leveled out.
mm-hmm.
But now at the start of 24, you're starting to see them go back to a more normal level, about 5% appreciation year over year. Now these are national statistics, but our market follows those in general, if you take everything into account.
Right.
So, if you bought a house back in 2022, the price was X. If you were to buy it the next year, you didn't see it go up 20%, but you might have seen it go up 10%.
Mm-hmm.
In 23, that same home, instead of going up 10%, is now only gone up 5%. The bottom line, prices are still up. You're seeing a larger number of home price reductions, though, in the market because people are pricing. In order to get them sold, they're reducing price. So, what's that mean to the average buyer? Well, it's still a good time to buy. I've heard that, well, I'm buying at the peak. Well, you're not buying at the peak of the market. That would have been 22.
Right. That's
That would have
fast.
been 22.
Yeah.
We're not at the peak of the market. Are we still on the downward slide, downward trend? I don't know. Hard to predict. We got an election coming up. interest rates are still, out there. Yeah, they're starting to stabilize, but are your wages going to go up enough? And ultimately, it all comes back to, why are you moving? Do you need a bigger house or not? Are you changing jobs or not? Are you moving to a different area? All of those things come into play. But the benefit is, or the good news for buyers is, home prices are beginning to go back to a more normal. Now, are we in a buyer's market? No, we are not. There is still high demand in certain price ranges.
Right.
And not a lot of inventory. In fact, the inventory, and next week we'll talk at length about inventory still isn't back to pre-pandemic levels. So, it's a better time than it was, but if you need to buy, you need to buy.
The pendulum is starting to swing.
The pendulum is starting to swing.
But it's still on the buyer's side.
It on the seller's side.
Or, I mean, the seller's side.
It's
Sorry.
still on the seller's
Thank
side, but it's beginning to swing towards the buyers, towards normal market.
Yeah.
So, ultimately, it comes down to, for buyers, can I afford to buy homes in my price range? Well, and there's all kinds of calculators out there, and I put one, and I just picked a random number. I did a $400,000 house. Now, that's not the average home price in our marketplace, but if you're at 4, or you're going at 8, or you're going at 2, you can kind of put it in here. But if you have a $440,000 mortgage, the difference in payment between a 7.5% mortgage rate and a 6.5% mortgage rate is about $300 a month.
That's significant.
That's significant. So bring that in half. If it's a $220,000 house, it's $150 a month.
Yeah.
What can you do with $150 a month?
I pay a utility bill or two. I mean,
Right.
there's definitely it's the grocery store bill.
Yes.
Per week. Like our family of 4, it's like every week Allison's like $150.
Yeah.
I'm like, really?
Really? And you brought 3 bags home.
Yeah, right. Yeah, and we still have nothing to eat.
There's still nothing there. So the bottom line is that the pricing, that the mortgage rates coming down is a good thing for the market. It's going to make the market a little bit more healthy. And above that, it allows buyers to come in and buy at a significantly lower rate than what they would have when rates were high. So overall, things are improving.
They are improving. All right, definitely some interesting information there, and we'll see how things continue to settle as
how they pan out.
As we go through the rest of the year, and of course, like you said, election year as well. So that always plays into it. But we're not seeing that cliff that everybody talked about.
Nope.
Prices are going to no, they're not going down.
They're not going down.
All right, very good. Continue this conversation with Mark. You can reach out to him. Your contact info.
Sure. The website's skabowskiteam.com, 574-527-0660. Can email me, mark@skabowskiteam.com.
All right, you've been listening to Real Estate in Real Time. Have yourself a wonderful weekend.